Understanding revenue, a comprehensive guide. Revenue is a critical component of any business's financial structure. Often referred to as the top line, revenue represents the money generated from normal business operations. It's calculated using the formula: revenue equals average sales price x number of units sold. This figure serves as the foundation from which costs are subtracted to determine net income, making it essential for assessing a company's financial health. Key concepts of revenue. What constitutes revenue? Revenue encompasses funds that a company collects from the sale of goods or services over a specified time frame, typically a quarter or year, before any expenses are deducted. It is not merely a figure, it represents a company's performance and viability within the market. It serves as the starting point for understanding operational success, and it's classified in different ways, such as 1. Operating revenue, the income generated from a company's core business activities. 2. Non-operating revenue, revenue derived from secondary sources, such as investment income or lawsuit settlements. Differences between revenue and income. While the terms revenue and income are sometimes used interchangeably, they represent different aspects of a company's financials. Revenue is the gross amount derived from sales, while income or profit is calculated after deducting various expenses such as cost of goods sold, COGS, operating expenses, taxes, interest. To summarize, net income equals revenue, expenses. This distinction is vital for investors analyzing a company's financial viability and future growth potential. Calculation of revenue. The calculation of revenue can vary significantly from one industry to another. As a simple framework, the formula for net revenue can be represented as net revenue equals quantity sold times unit price, discounts, allowances, returns. For businesses with diverse product lines, companies often calculate net revenue for each product or service category separately to arrive at total revenue. For example, Apple Incorporated must consider how many iPhones, iPads, and other products it sells, each with different pricing strategies and return policies. Revenue recognition principles. The Financial Accounting Standards Board outlines guidelines for recognizing revenue through the Revenue from Contracts with Customers, Topic 606, framework, which includes 1. Identifying the contract with the customer. 2. Determining performance obligations within the contract. 3. Establishing the transaction price. 4. Allocating the transaction price to performance obligations. 5. Recognizing revenue once the performance obligations are fulfilled. This structured approach enhances transparency and consistency in financial reporting. Revenue in different contexts. Government revenue. For government entities, revenue primarily consists of funds received from taxation, income, property, sales taxes, fees and fines, grants and intergovernmental transfers, asset sales. Understanding government revenue is essential for evaluating public finance and budget allocations. Nonprofit revenue. Nonprofit organizations derive revenue from donations, grants, membership fees, fundraising events. Revenue for nonprofits is crucial for sustaining operations and fulfilling their mission. Real estate revenue. In real estate, revenue refers to the income earned from properties, including rental income, parking fees. The effectiveness of property management is often evaluated through net operating income, NOI, which is calculated by subtracting operating expenses from property income. Revenue versus cash flow. It's important to differentiate revenue from cash flow. Revenue measures the money earned through sales, while cash flow indicates the net cash coming into and out of a business. An effective analysis of a company's overall health requires understanding both metrics, as revenue can occur without immediate cash flow due to various conditions, such as credit sales. Example: Microsoft's revenue. To illustrate the application of revenue concepts, let's consider Microsoft, which reports revenue across several segments, such as productivity and business processes, including Office products and LinkedIn. Intelligent cloud, covering cloud services and enterprise solutions. More personal computing, comprising Windows, Xbox, and Surface devices. For the quarter ending March 31, 2024, Microsoft reported total revenue of $61.9 billion, demonstrating its diverse revenue streams and showcasing the importance of segment reporting for clarity and understanding. Conclusion: revenue is paramount in evaluating the effectiveness and sustainability of a company's operations. It provides a clear snapshot of gross sales, while net income reveals the actual profitability by considering expenses. Understanding these concepts is crucial for investors, management, and stakeholders to make informed decisions regarding a business's financial health and potential for future growth. Investment analysis often focuses on revenue growth alongside profitability. As businesses continually strive to maximize revenue while managing costs, these metrics play a crucial role in operational strategy and overall business success. Companies, whether public, private, non-profit, or governmental, all rely on accurate revenue reporting to inform their strategies and assure stakeholders of their financial standing. This guide has provided a comprehensive understanding of what revenue means in a business context, its calculations, types, and implications for different entities. Utilizing this knowledge can significantly enhance one's understanding of not just financial statements, but also the broader market dynamics at play.